How's it going, everyone? Welcome to this week's Thursday Thoughts video. I'm Kyle Hurley, joined by John Coughlin. How we doing, John?
Not too bad. For those of you that know me, new haircut today. So hopefully the crowd likes that.
Good, man. Looks good. All slicked back, nice and tight. I love it.
Yep, only twice a
Um,
year.
for today's video, we wanted to give an update on the housing market. A lot of headlines being put out there. We've been getting a lot of questions from clients around real estate. So figured it might be helpful for us to kind of just lay out some of the things we're keeping an eye on. There's a lot going on, obviously out there, so a lot to unpack. So we are going to try and make sense of it all here. All right, so what we got here is just a list of headlines. So these are just a quick snip of a lot of kind of different headlines that you might see in the Wall Street Journal and a bunch of other publications. So there's definitely a lot of negativity with the housing market right now, and understandably so. Mainly for the next slide here, which is a illustration of the 30-year fixed mortgage rate. So me and John have been talking about this a lot. I'm sure you guys have been hearing about it all over the news. Is the Federal Reserve has been increasing interest rates throughout the year. In the goal for them is to break the back of inflation, kill demand, etc. So what this chart is showing is that the 30-year fixed mortgage rate has doubled in roughly 9 months, which is just incredible. I actually went through with a real estate purchase last year, got around 3%. John, what did you get something similar on your kind of
Yeah,
real
I
estate
actually
deals?
I refinanced twice for my place and got it down to like on a 30-year jumbo to like 2,875. So I mean it's just like ridiculous that this is in not even 12 months jumped up to nearly 7% from people were getting as low as like 2% on a 15-year fixed mortgage. So this is just nuts to see.
Yeah, I think, obviously those low rates, I mean, we were fortunate to kind of basically have zero rates for about a decade and, could even say longer than that. When you look at this chart, the everyday investor, you kind of just are like, what is this, right? This is just a line going up. How does this impact me? So we wanted to kind of put some numbers behind this to try and make sense of it all. So for example, if you went to the bank, you wanted to buy a house and you need to take out, let's say, a $400,000 loan. You want to do a 30-year fixed mortgage, which is, basically the most popular way that we do mortgages here in the US. And let's say in the beginning of the year, you would have gotten around 3%. Now you want that same loan, 400,000, 30-year fixed, but now you're probably getting it around, let's be conservative, right? Let's say 6%. So a double from your last loan. That would actually cost you as a borrower $700 more per month. So all in, you're paying around an extra 8,500. This is substantial. I mean, $700 a month, for some, they have the cash flow to kind of support that. But for others that are paying more at the gas pump, they're paying more at the grocery store, an extra 700 a month for your house or housing costs. I mean, that's where people are getting priced out. That's where they put their hands up. No matter how bad they want the house, they simply can't afford it. So this is where the Fed can really kind of they can't control everything. They can't control the supply chains. They can't control a number of other factors that are still kind of hurting the economy. But these mortgage rates are definitely something where they can start to cool demand.
Yeah,
And
that's
then,
a great.
yeah,
Yeah,
go
so
ahead,
just
John.
yeah, just to go off that, I mean, I think a big question we get a lot is like, where is the housing market going to go? Is it going to crash? They're raising interest rates so quickly. It just all the numbers looks like this is we're in a way different spot than 2008. Mortgage rates have jumped up obviously really, really quickly, but there is just such a problem with the supply side of the housing market. There are too many buyers out there for the homes that have been built over the past 10, 12 years. So there's even with these rates pushing more people into the rental market. I mean, the housing market is still really solid because there isn't a supply problem like there was going into 2008, where you had extreme overbuilding, terrible underwriting, which then caused a huge shift and people dumping houses at whatever 30, 40, 50, 60, 70% off, depending on what market you're in. So, I mean, the biggest thing that really sucks for a lot of people if they're looking to buy homes at this point in time are that it's still competitive out there. Rates are bringing down housing prices slightly, and some people are just deciding to back out of the market altogether because they can't afford these higher interest rates. But it's just still a tough time to buy a house at the end of the day.
Yeah. And I think I saw a stat, and I might have put this out in one of my blogs. Mortgage applications are down like 40% year over year. So you're definitely starting to see this trickle through the system with the increase in interest rates that we're seeing, which brings us to this next point here. So US existing home sales have been down 7 months in a row now. So why is this? So again, going back to the interest rates, there's a couple different reasons that you can kind of look at this chart. So let's say you're an existing, you own a home and you've locked yourself in at, let's say, a 3% rate. Why in God's name, if you didn't have to, would you want to sell your house right now? If that means you sell your house, then you have to get a loan to buy what your new property, and that the rate you're getting on that is probably double what you currently had. So the Wall Street Journal actually came out with an article a few weeks ago. They called it like a golden handcuffs, right? This is not helping the supply problem because the
Exactly.
people who have these really low interest rates, they're just throwing their hands up like, I'm just going to sit back and wait until these rates kind of come down and I can get a better rate should I want to buy another house. So it's really interesting. You can start to see, the domino effect of high interest rates and how that kind of plays out through the system.
I think a big portion of the problem here is that these people that are in this golden handcuff situation, they have all this built up equity. Some of their houses are paid off. There's actually a huge portion of homes out there that are paid off, which is why the housing market is so strong. It's not as leveraged as it was going into 2007, 2008. These people that have all this equity built up are not looking to go and buy a home at these elevated prices and elevated interest rates. There's nowhere for them to put that equity into, even if they wanted to net everything else. These interest rates are so much higher that even with those huge gains on their home, they're going to go and lock in a mortgage at double or something, maybe even triple, depending on what rate they have. And it just makes no sense for them to sell at this point in time. So that crushes supply. The fact that building in the US has just been low really since 2008. Going into 2008, I think there was like 2 million homes per year being built, and now we're around 1.5 million homes per year being built, yet the population has grown all throughout that time. And then the third portion of that is that COVID has come and caused a huge supply chain issue that drove materials costs up, and you're just not seeing builders building the way they were going into 2007, 2008. So it just really has made this a long-term seller's market. It's looking like that is going to start to change here because interest rates are going to continue to climb, in our opinion. But it's just really hard to tell where things are going to go because supply is so slanted to the seller side. So consult your mortgage broker. Talk to us if you have questions. Tough call out there on where the housing market is going. I certainly don't think this is going to look anything like 2008. People are in a much better place financially, and the housing market is not as leveraged as it was going to 08. But certainly if you're a buyer out there, it's a tough time. So if the numbers work, if you can afford it, I think that's when it makes sense to buy, in my opinion. Don't overextend yourself.
All good points there. So we're starting to see mortgage applications down. We're really starting to see these negative headlines about, is this another 2008 housing moment? But what's really important to remind yourself is that the median sale price for these houses are actually still trending up. Now, why is that? And John kind of already alluded to that. It's because we still have such a big supply problem, right? There's still so many buyers out there that want to buy, all these millennials that want to settle down, yet there's not enough houses out there for them to kind of move into. So there's almost like a bottoming there where if prices were to get low, right, if we were to see a significant correction, then there's definitely an inflow of buyers that would finally be like, okay, even if I'm getting at a higher rate, you can get a little creative with those adjustable rate mortgages and all that stuff. But it's interesting to see that even amidst kind of the significant increase in interest rates, home prices themselves have remained somewhat stable.
Right. And I think one kind of morbid thing to think about here is like, this is a supply problem at the end of the day. Yeah, interest rates 100% are affecting this because of the buyer being able to afford less and being pushed out of the market. But realistically, at the end of the day, there's X amount of homes out on the market available for sale, and there's X amount of buyers. Even if these other people were to sell their homes, they need to go move somewhere or they need to die. So you're in this kind of weird scenario where there just needs to be more homes built. The population has grown. There's not enough supply. I still am in the camp that this is not anything like 2008. This is a much different scenario. And I think you're going to see some prices come down and more people go into the renting market. But those people that are out there that are looking to buy or that are in existing homes and are going to look to sell at some point in the future when things look a little bit better, maybe with interest rates and the housing market calms down, they still need somewhere to go. So it's really a supply problem more than anything. And when supply is lower than demand, prices tend to stay up.
Yeah, and I think it's important too to, just talk about the fact that this is kind of market specific too, right? I mean, I think, with COVID,
Right.
everyone was able to kind of work remotely. They were able to kind of move places they never really would have thought of
Bozeman,
before.
Montana.
I love the Boise example with where you just saw home prices absolutely skyrocket, and now all these people are realizing, oh shit, I actually have to live in Boise, Idaho. So now they're kind of like, okay. And then you look at the markets, you look at like in Austin, Texas, California, even here in Boston, prices, yes, they've, maybe softened a little bit, but they've held more stable compared to these other, I would call maybe an anomaly of these other areas where, they benefited a lot from kind of these COVID induced moves, and people are starting to realize maybe that wasn't exactly for them. So it'll be interesting to see which markets hold, but it is definitely prices themselves on an average across the US have stayed relatively stable. And then I'll let John kind of explain this hodgepodge here because I had a headache looking at this one.
Yeah, yeah, this chart really spoke to me. So housing supply and prices. So this is just a supply and price correlation chart, just basically supply and demand. Going into 2005, 6 there, you saw a huge spike in the housing supply, and that was kind of when the prices started to turn here, right in 06, 07. And obviously you had a huge crash. I mean, a lot of other things going on there with bad mortgages being underwritten and a lot different type of mortgages where we have adjustable rate mortgages on more conservative terms than what they were underwriting back in those days. So just basically the supply shoots up, prices go down, and now you'll see since really, I mean, the housing market kind of bottomed in 2011 in the US, and since then they just have builders have not built homes at the same rate they did before going into 2008. And I think a lot of that has to do with just the scare of how many people were put out of business during that housing supply surplus going into 2005, 2006, 2007. They were just scared to build after that point in time, and that's really left us where we're at today, where there's just not enough homes out there for people to buy. And the only thing that's going to fix that is either the government stepping in or more people getting into the building market, in my opinion. So
Yeah.
just a tough scenario out there if you're a buyer. I think things will start to come down, but just really try to be careful out there with getting into these bidding wars, especially in a time like this where rates are going up. You just don't want to overextend yourself, because if we do have a correction there and you're in something that you shouldn't have bought, you can't afford, or you're in Bozeman, Montana, and you're not a Bozeman, Montana person, it's going to be tough to get out if the market shifts and drops 20% on you and you're looking at all that equity being erased. So
Yeah.
be careful. It's tough call. Talk with us if you have questions. Talk with your mortgage brokers. We're happy to discuss. But long story short, I don't think this is going to be 2008. I don't know about you, Kyle.
No, I'm in the same boat. I mean, it almost gets back to the point where it's like the stock market a little bit, where it almost felt like we were a little bit due for a correction. I mean, the recency bias you would see with the people investing in real estate, they were almost buying these properties and had their noses in the air of like, this thing will never go down. And if you have a long term, it's like the stock market, right? If you have a long term investment horizon with real estate or even stocks and bonds and all that good stuff, your chances of having a positive return are increased the longer you hold it. But it's just, you got to be careful, right? To your point, this is not a market to try and reach. And then I would even argue, I mean, we've talked about this internally, is a 30-year fixed mortgage is probably one of the greatest inflation hedges you can have. I mean, when we're locked in at these rates that are around 3%, and now we've seen, rates double. So my mortgage payment has stayed the same, and then my dollar's not going as far. So it's like I have almost an incentive to keep my mortgage, because I'm like, okay, the cost of my housing hasn't increased. So it's interesting if you kind of look at it like that as well.
Yeah,
But yeah,
exactly.
no, it's scary out there. I mean, I heard it, someone joke, I think it was one of the Ritholtz guys, that it's like one of the Fed's policy, like one of their main objectives is price stability. And I think that's, we're not even close to having anywhere of some sort of stable prices, not only in the stock market, but in the housing market as well. So there's a lot going on. It's a lot of uncertainty. So, if you're in the market or you're trying to buy some real estate, we understand that there's, your head might be spinning, lean on us. We'll look at deals for you. We'll try and give you some thoughts on where we think if it's a good deal or not, and ultimately, John, I mean, you
Yeah,
hit it
yeah,
too. It's
and
all
some
about cash
and
flow.
some unbiased advice. Sorry to cut you off. Some unbiased advice. The one thing I don't like, I have a lot of realtor friends, and I have a lot of realtors I would recommend people to, but I just hate when I have clients coming to me and saying the realtor is pushing them and pushing them to buy, because there's only so much you can afford at the end of the day. That's the one thing. I mean, come to us if you have questions on housing and stuff like that. I feel like we give pretty sound advice, at least from where your numbers stand. So just be careful out there with that sort of stuff, because a lot of that pushing in these bidding wars can get dangerous, in my opinion.
Oh, absolutely. Yeah. God forbid people allow house inspections again, huh? It used to be like, you had your tail between your legs if you told your neighbor that you sold your house below ask. And now it's like, okay, people are starting to be open to the fact that, you're not going to get that price you see on Zillow. So it'll be really interesting to kind of see how this plays out over the next, I'd call it 6 to 12 months. Like you said, John, if we continue to get rates increases here, but again, we don't see this being a 2008 issue, but if we can help in any way by looking at any deals or just being a soundboard for you, please feel free to reach out to us. Thank you for joining us for this week's Thursday Thoughts. And if you have any questions or any feedback, we greatly appreciate it. So take care, everyone.
Thanks.